Hello there. This is Bruce at Fleet Capital Management. It is Friday, the 11th day of April, 2025. The market just closed. It's been an interesting and exhausting and dizzying week. We're going to take a look at the charts, and I want to try to give you some perspective on the direction we may be headed. I have to tell you, it's a little bit murky. But I'm also going to show you a new system I am creating and putting in place for the potential that we move into a bear market, and I'll show you that on the chart as well, and how we can take advantage and actually profit to the downside. So, a lot to talk about. I'll keep this as short as I possibly can. We always have to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at Fleet Capital Management. The VIX, we talk about the VIX a lot. I've shown you that below 17, let me see. Someone asked if I could get a highlighter to work. And I don't see there's this little red highlighter that might help, but I don't think it lets me change pages. We'll kind of experiment with that. But what I have always told you is when the VIX is at 17 or below, that is the sweet spot. That means we're in a controlled, rational bull market. When the VIX is between 17 and 20, it's kind of a caution zone. Does not mean that things are getting bad. It just means that there's a little bit of elevated risk in the market or fear. You can use those two interchangeably. When the VIX is above 20, my favorite analyst, Tom Bowley, always likes to say above 20, nothing good usually happens. And you can even see this is just an annualized return when the VIX is over 20. It's a negative 36, 37%. So this was COVID. This was just a kind of an outlier. This was a 100-year pandemic. So let's forget that for a minute. The high of the VIX is normally 30 to, I would say, 35, maybe 36. That is kind of a high that we see in extreme areas. We're almost at 40 right now. So the VIX is still way too high. And the reason I'm belaboring this point a little bit is when we have a strong up market like we did today, sometimes I'll get an email that says, and I love all the emails, but it says, is it time to get back in? Well, no, not based on all of the analysis, not based on where the VIX is, the way the moving averages look, the momentum and everything else. I'm going to show you all of that. So we have to be very careful that when the market jumps up one or two, or like it did the other day, 6 or 10%, that we don't get FOMO, fear of missing out, because one or two really strong days does not create a trend. And remember, in a down market, we're going to have strong up days. In an up market, we're going to have strong down days. We don't jump around and try to figure out how to take advantage of those. We look for the trend. We look for the trend. Let's see if this is going to work. It did. Good. So you guys will have to let me know if this little red highlighter helps you see what I'm seeing on the chart. Bitcoin. Let's talk about Bitcoin for a second because quite a number of you are in downside protected Bitcoin ETFs and have been waiting for Bitcoin to turn around. Well, let me show you some things that I'm seeing on the chart. First of all, Bitcoin really had a decline. And then in this box, does that look like a sideways consolidation to you? It does to me. And in a consolidation, we don't know if it's going to break to the upside or break to the downside. We can come to some conclusions by looking at many of our indicators. And the first one would be this blue and red linear regression. Remember, the red line going down the middle is the mean going back. This is going back 100 weeks because this is a weekly chart. Okay. And remember that when price closes above the linear regression, as it did back here, it tends to come down back towards the mean and overshoot it. We don't have a real example. Well, maybe right there. When the price closes, this wasn't really below, but it's close enough. Below the linear regression, it tends to come back towards the mean and overshoot it. That's what generally happens. Does not mean that's what has to happen. That's what generally happens. Now, we had a close. This gray bar is this week. This red bar is last week. Last week, Bitcoin closed at the bottom of its linear regression. And this week, it now moved back up. The hash mark or the tick to the right is the close for the week. This is a weekly chart. Remember, you can always see if I'm what time frame I'm looking on. Right now, I'm just looking at this weekly chart. So basically, Bitcoin did what is expected when it gets down to the bottom of its linear regression. Is this downtrend over? No. If I look at my moving averages, they're not over. The shortest one is starting to point up, but the longer two are still sloping down. If I look, this is a momentum graph, and the momentum just went below, but it'll be interesting to see if it turns back up. Sometimes it goes below for short periods of time and then turns back up. I don't know what's going to happen here yet, but that could be a clue. This is on balance volume, which has been negative, tried to go higher and then it fell down again, but it's kissing right now. And if it crosses above and turns green, that would support my theory that we may be starting somewhat of a new uptrend of Bitcoin. The other thing, this down here is called RSI. The blue line is a moving average of RSI, and then the yellow line is the RSI. If that crosses back above that blue moving average of the RSI, and those lines are above 50 or 55, that could be bullish also. My point is, and I'm going to show you on a daily chart or on the charts when we get there, we might be seeing a turn in Bitcoin. It's very possible. There are a lot, I don't know what's going to happen, but there are a lot of things that are giving me some interesting signals. Profiting on the downside. So this is the Qs. This is the NASDAQ, and you can always see, hopefully you can see that. This is the 1-day chart. So each bar is 1 day. And you'll remember that the blue line is the 20-day moving average. The gold line is the 50-day moving average. The red line is the 200-day moving average. Now, a technical bear market is when the 50 crosses below the 200. It's called a death cross, and it is a technical bear market until it changes. Look how close they are. They're just about kissing. Will this gold line, the 50, continue down and cross below and create a real technical bear market? I don't know. I don't know until it happens. Could it turn back up from here? Absolutely, it could, but I just don't know. So we put things into place to profit on the downside only when we're in a bear market. And we are very, very, very close. So I'll explain that more when we get to the charts. But the weekly chart shows something a little bit different. Let me just see something here. Yeah, this was the daily chart showing you the bear market because that's what we use for the bear market. But if I look at the Qs on the weekly chart, I'm seeing something different. Yes, we broke through the linear regression and continued down, but then we went down to this green level of support right there. And we have now, for the week, bounced off of that level of support. That's why I'm saying, going back to the daily chart, I don't know if that's going to continue down and create a bear market, technically speaking, or if it's going to curve and go back up, because I'm seeing different pictures, if you will, between the daily chart and the weekly chart. Hopefully that makes sense. I didn't mean to confuse you on that. And everything we're talking about is direction of the market. And that's the most important thing that we can talk about because everything else follows from there. So now let's go over to our matrix. Updated as of today. Someone asked me to put these dark lines underneath each week so they could have a week separator done. Okay, so hopefully that helps. On the dailies, even though we had a really strong day today, we're red. And I'll show you. On the weeklies, we're red. On our moving average stack, which I call it, we are in the correction zone. We are not yet in the bear market, but we're close. We're close. Hopefully, it won't happen. Our 1020 bear market avoidance indicator has been cluing us into all this weakness for quite a long time now. It's still in the down zone. And VIX is still, I mean, we're almost at 40, we're at 38. And remember, 20 is kind of the limit. So this needs to come way down. This needs to get back into pullback market or bullish setup before we're going to start getting aggressive to the long side. We're not there yet. There is just no question about it. This is the S&P 500. You may notice one little change that I've made on my overall chart. This is the weekly as it has been. This is the daily as it has been. And I have now added the 1 hour. And I'll get back to you in a minute and I'll show you why I've added the hourly chart. But here we go. We broke down through the linear regression. This is the weekly. We've had a really bad, couple of weeks. We've had a bad year since Mr. Trump took office. But this is called point of control. That just means that there's a lot of volume in that area, and this line down here is an area of support. And it looks like that support has held. So I don't know if that's going to be enough for this thing to start to rise back up next week. I kind of doubt it, but I just don't know yet. Our momentum is clearly to the downside. Our volume is clearly to the downside, maybe drying up a little bit. That could be a good sign. Our RSI is clearly to the downside, might be coming back up. That could be a good sign. I'm not seeing anything great yet. Over here on the daily for the S&P, this is where we create our matrix. Again, you can see that if that gold line crosses below that red line, it becomes a technical bear market. I don't know what's going to happen yet, but we'll see. And if this does become a technical bear market, actually, I'm going to go to the Qs because I think it's going to be a little bit easier to see. If this does become a technical bear market, then now I'll show you why I have the hourlies on my chart. I will use the hourly chart where each bar represents 1 hour to potentially buy securities that make money as the market's going down. Those are called inverse securities. They work inverse of normal. When you buy the ETF QQQ, you make money as the market's going up. When you buy the inverse ETF of QQQ, it's a different symbol. It's actually down here. It's PSQ. You make money as the market's going down. Okay. So I am finalizing this weekend because we're so close to bear market territory, my rules for how to handle this. But my general rule will be, I'm going back in time to give you an example. When this white 2 hour moving average crosses below the 10-hour moving average, that would be a signal to go short or to buy PSQ, which made money as the market was falling. Okay. And then I've got other rules of when to get out of it, mostly based on RSI. So if this becomes the rule, another part of the rule is the volume has to be red, has to be going down. I'd like to see the momentum going down. And so there's going to be a number of rules that will get us in and out of these types of securities pretty quickly. And what you don't want to do, so here is where we are right now, market's closed. If we go into a bear market, and that would be over here on the daily chart. If we go into a bear market and that white 2 hour moving average crosses below this blue 10-hour moving average, if it does and everything else is lining up, then I will buy PSQ for group one, group two, and anyone in group three who has asked me to have them participate. I will buy that. And if the market continues to fall, as long as the market's falling, PSQ will make money. What I don't want you to do is to think that we're going to be in these types of investments for days, weeks, months. We're not. We're going to do, these are surgical. We're going to use surgical precision to where we're going to go in. And then if anything changes on any one of my indicators, we're going to sell it and take whatever profit we have. I don't care if it's a 0.5%, 5%, 10%. I hope it's always 10%, but we're going to get out because you have to understand the market generally goes up over time. That's what happens. And so if the bias is always to the positive, there are periods where it's in the negative, but you don't want to get comfortable in there because it doesn't usually last long. You see how if we had been in a bear market, if we had been, which we weren't, and you see how that white line went up and then it crossed below, if everything else was showing correctly, which it looks like it just about was, we would have gone in to PSQ and made money on that downed trend. So I just wanted you to understand that we do have tools, I do, at least at my disposal to help us make money if the market is going down. And I showed you PSQ. That is the inverse on the QQQ. And SH, the other symbol here, is the downside on the S&P. Generally, they work together, so I might put 5% in PSQ and 5% in the S&P, but sometimes they go in and out of bear markets at different times. That's why there's two different symbols. I will use both separately, but I can use them together, so you may see both. So I just want you to understand that the markets don't look good. They could be bouncing right now. I don't know yet. But if they do fall into that technical bear market, we're going to start to employ strategies to try to add some gains while the market's going down. And again, hopefully that makes sense. Gold has been on a tear, actually to a degree that I don't like. This is parabolic. It's almost straight up. That's not healthy. Healthy is a 45-degree angle. Straight up is usually not sustainable. And if we look over on the weekly chart for gold, we're way above the linear regression. Now, normally, if that were to happen, I would put a stop really tight so that if this thing's going to fall, we'll grab our profits and we can wait to go back in. But because of the systematic, I guess I should call that, or systemic change in an inflationary environment, because tariffs are inflationary, no questions asked, um, gold could continue to rise, but it's not going to go straight up. Even this, if you look at the linear regression, that is on a 45-degree angle. That's kind of perfect, actually. But even when it's like that, we have times where it goes down and it goes up and it goes down and it goes up, went down a little bit, goes up. That's normal. So I'm going to give gold more leeway since we are clearly in an inflationary environment. And hopefully it won't come down too far. If it gets down to this level, I get alerted with some alarms that I've set because I don't want it to go any lower than that. Hopefully it won't. I could conceivably see it coming back down to about mid-range of this weekly bar and then continuing up. But I just wanted you to know I don't like this. I don't like when things get parabolic and make money too fast because they're not sustainable. Okay, so that is the story. If you have any questions, please let me know. Right now, to end the overall trend is down. We are not in a bear market yet. Could be next week, who knows? But the overall is down. So I can't, even if we have a good day, a good couple of days, I can't expose you to a lot of risk assets trying to make money on the upside when the overall trend is still this red and this down. Okay. You guys have been really good at using this button. If you have any need to hop on to my calendar so we can do a one-on-one Zoom and talk more personally, just feel free to click on there. I'll take you right to my calendar. Um, you can always send me an email if you have questions. I love questions. So feel free to call me with a question. And that's a story. Have a great weekend. Don't worry about the market. The market's just the market. It's going to be the market. And I was explaining to someone the other day that markets go through seasons and seasons change. We're in a negative season right now. But don't ever think that like the party's over and it's just going to keep going down for that doesn't ever happen. We're in a negative season. This season will change. So, with that word of wisdom, have a wonderful weekend. Please let me know if you have any questions, and we will talk very soon. Be back with you Monday morning. Bye bye.